You're listening to the Creative Capital Podcast. You're dying to learn about how you can create wealth through real estate investing? Then you come to the right place. Join in every week as we go over the ins and outs of real estate investing and learn how you too can become financially free.
If the government comes in and says, oh, we're going to change the contract, we're going to make it how we want it to read, that creates a whole bag of worms. Now, if you set a precedent that the government can come in and change any contract between people, one, it's unconstitutional. Two, if it actually goes through, we've lost all our freedoms in this country because basically the government can come in and control and do whatever the hell they want.
What's going on, everyone? This is Josh Ferrari, host of the Creative Capital Podcast. On today's show, we have a guy by the name of R.C. Rue. Now, R.C. Rue is a man of many talents. He definitely has an entrepreneurial personality to him. He is married to his wife named Brooke. He has two boys, Wyatt and Logan. He's originally from New Orleans, Louisiana. He moved to Mobile in 2003 for college. He graduated in 2007 with a finance and economics degree. His past experience includes commercial real estate agent. He was a hardware store manager where he developed a commercial sales department from scratch to providing 30% of store sales 2 years later. He was a haberdasher, and now he currently owns his own insurance agency that has been going on for 8 years. So he's done just about a little bit of everything, and it looks like he got into the real estate space maybe 10 or so years ago. So this guy has a wealth of knowledge for us today. We go over things to be aware of when it comes to buying insurance for our investments, whether we need higher coverage, lower coverage, whether we need to consider moving from residential to commercial, kind of what coronavirus is doing in the insurance world and what we can see moving forward. Coronavirus has definitely changed our entire way of living. Everything from what the heck are we doing at the house 24/7 to there's no sports to watch, just to everything. So even in the insurance world, there's been some changes. They're attempting to pass some kind of bill now where they're trying to force insurance companies to pay business interruption policies. And so it's just a whole gamut of craziness happening. And we go over all that. So without further ado, let's bring on our guest. What's going on, RC? How you doing? It's good to have you out on the show.
Thanks, Josh. Yeah, just another day in quarantine, man.
Yeah, stuck in the house, unable to do anything, constantly on this computer, trying to figure out what's going on. Oh, it's miserable.
I'm always sitting at a desk on a computer. That's nothing new for my world, but it's a little different with two little kids, coming in and out. So.
Oh, see, that's a whole nother world I haven't even entered into yet. So tell us a little bit about yourself. For those listeners out there that don't know who you are, what you do, kind of give us a little background on.
Yeah, so, I don't know how broad-based your audience is, but of course, we're here in Mobile, Alabama. I'm not originally from here, originally from the New Orleans area. Came out here in 2003 for college, Spring Hill College, a little small Jesuit college here in Mobile, Alabama. Graduated 4 years later in 2007 with a finance economics degree. Got married. I got a couple kids these days. Background-wise, from a career-wise, I've done a bunch of different things. I was a commercial real estate agent for a few years. Also, I did a bit in the hardware industry. I was a commercial sales manager, so to speak. So I did everything from managing the store to developing a commercial department, where when I left 2 years later, it was roughly 30% of the sales of the store, just from me being a little one-man division of the company. And then I got it doing what's called being a haberdasher, which a lot of people probably aren't familiar with, but essentially think of custom clothing. Somebody come to you if you're a professional, don't have time to shop, and custom tailoring, everything from slacks and shirts to the whole 9 yards of custom suits that cost more than a car if you just want the world's nicest thing. From there, I phased into what I've been doing for the last 8 years, which is running my insurance agency. Very different than all those other careers. So I've kind of been all over the place, just getting an idea of what I want to do in this world before I kind of settle down.
So having done all those other things previous, what made you interested in insurance?
Good question. So growing up, I always had never do insurance. My grandmother was insurance. My dad is in insurance. Both of them worked in different capacities in an agency than I have. My dad was a agent strictly doing commercial sales. My grandmother was managing office staff and doing more clerical stuff. So I took a different approach and opening up an agency. It always was boring as hell as a kid, seeing stacks of paper. But the background I had with understanding how money flows in the economy, trying my hand at different things, I basically sat down and said, the business model of an insurance agency makes a hell of a lot of sense. That paired with the fact at the end of the day, when I lay my head down, I feel like I am contributing to society and doing stuff that actually helps people, as opposed to just doing something that's fun, but I don't know if I'm not really making a difference. So those two things combined, making a difference and a great business model, said, you know what, it's a no-brainer when I really, really think hard about it. And so I just quit my job and opened up an agency with no real experience doing it, just a rough idea of, you know, my dad and grandmother being in the industry, but that really doesn't tell you what you do on a day-to-day basis.
Wow. So that was a big leap of faith, just jumping into that, having no experience at all. The real like entrepreneur mindset that you had to have to jump into that.
You know, there's a story out there. I think it was Hernandez Cortez. I think I'm saying that right. It might be slightly off, but anyway, explorer. He was going to conquer civilization, trying to motivate men. A bunch of people had never conquered it before to get the riches. Long story short, he said the best way to motivate them is give them no other options. So he told them to burn the ships, that the only way they were going to leave was to conquer the civilization and take their ships to sail home. And so that was kind of my thought process. If I give myself no way out, I'll sink or swim, but hopefully I don't sink, kind of thing.
Yeah, for sure. Hopefully you don't sink. So what are some of the things that we as investors need to be aware of when it comes to buying insurance just as a whole for our real estate investments?
Well, there is a good bit of stuff, but to kind of just hit on some highlights, so to speak. Typically, when I talk to investors, there's one of two train of thoughts when it comes to insurance as it regards to their property. They're either looking at the cash flow side of the equation, or they're looking at the equity protection. And they kind of pull each other in different directions, because to get the best coverage, you got to spend more money, which is protecting the equity position you have in whatever investment property. So whether it's the actual money you invested in it, whether it's the sweat equity, appreciation, et cetera, that's going to cost more to make sure you have complete coverage, so to speak, and try to check all the boxes, dot all the I's, cross all the T's. On the other side, it's, well, let me get enough to satisfy a mortgage or enough for complete worst case scenario and nothing more, but then it helps a lower price and therefore my cash flow increases. So it's kind of two different opposing views, but to kind of dive in a little deeper, so to speak, in looking at those, one of the big things you would want to, if you're an investor and you have no clue, or maybe you're just trying to get a fresher on insurance and how it all affects everything, is your policy a replacement cost policy, or is it an actual cash value? Replacement cost basically just means if the place burns to the ground, they're going to give you money up to the dollar that you paid for in coverage to replace it brand new. So brand new floors, brand new roof, etc., up to the value that you paid for. Actual cash value, on the other hand, place burns down to the ground or whatever destroys it, they're going to take the cost to rebuild it. So let's say the building costs $300,000 to rebuild, and then they're going to depreciate from that. So even if you paid for $300,000 of coverage, and that's what it costs to rebuild it, they're going to now depreciate based off of the age of the house and different components of it. And because depreciation can be arbitrary, there's not a set guideline between all insurance companies. That is a slippery slope of, does the insurance company depreciate too much and you get the short end of the stick or not? Now, on the flip side, it costs less for that kind of coverage, and so therefore your cash flow is better. But you might not have as much protection in the equity that you have invested in the actual property itself when it comes to coverage. Other than that, co-insurance is probably the other big thing if we're not going to get real nitty gritty. And essentially what co-insurance is in the commercial insurance world, you pretty much see it on the most policies, but essentially normally it's like what they call an 80% co-insurance you'll see on your policy. And it's a requirement the insurance companies give to the insureds saying that you have to cover your building or property, however you want to look at it, up to this amount. Otherwise, we're going to impose a penalty on you for not putting enough coverage on it. And some people say, well, why do they care how much coverage I put on it? Well, back in the day, there was enough lawsuits out there of people just been and named their price, and people got sued of, oh, you should have told them, you should have done this, you're not covering them adequate. So the easiest way to show that they were not taking advantage of people, they said, okay, well, we're going to give them a basically margin of error, saying, if you want to replace it, you got to do it within this margin, otherwise you're going to be shooting yourself in the foot, basically. And then we're going to penalize you so you're not likely to shoot yourself in the foot and then come back and be pissed about it later on us. So going into an example, if you had a building that was $100,000 and you had an 80% co-insurance, when I say $100,000, it costs $100,000 to rebuild it. 80% co-insurance says you are required to cover it for 80% of that, so $80,000. Otherwise, you'll have a co-insurance penalty. The co-insurance penalty is a somewhat complicated formula, but easiest way to give you an example is, let's say you're an investor and you say, hey, I only got 40 grand in this property. I only want to cover it for 40,000. I don't care. But if you cover it for 40,000, a loss happens, it burns to the ground, costs 100,000 to rebuild. They come in there and say, hey, you only covered it for 40,000. We're going to take that 40,000, divide it by what you're supposed to cover it for, which is 80% of the true value. So therefore 80,000 in this scenario. Take that 40,000 divided by 80,000, and that's your penalty factor. So in this case, that's 50%. Then they're going to take that 50% and times it by what you paid for in coverage, which is 40,000. So you really only get paid out 20,000 in that scenario.
Wow.
Where if you paid for 100,000 of coverage, there's no penalty, or 80,000 of coverage, there's no penalty because you're within the co-insurance limit. So investors who don't know or understand the policy language might think they're maximizing cash flow, and then when a claim arises, they could find out they're going to get paid out less than they owe a bank. And banks, insurance departments, in my experience, are not sophisticated enough to double check. And even though they require you to have insurance, they don't require to make sure that the co-insurance penalty isn't going to screw them and you. So in that scenario, if they bought it for 40,000, but borrowed, let's say 30 grand, but only get paid out 10 in cash, they're 10 grand short on their note, and the bank probably wouldn't have stopped them because they thought they had enough coverage at 40,000 because they only had a 30,000 loan. And then all of a sudden now you have a burnt pile of ash and a bank note for 30 grand, and the insurance company's only giving you 20, so you're short 10. So unless that land's worth 10 grand, you're in hot water.
There was definitely a lot to unpack there.
Sorry, my math side of me just throws out numbers.
So, yeah.
To follow.
No, it's no problem. So
You're going to give notes to all your listeners, right?
Does co-insurance include residential and commercial side? Do you need co-insurance for both?
So typically in like a homeowner's policy, you don't see co-insurance. Typically. Now, I'm not saying there's not cases. But once you get outside of the homeowner's policy, pretty much co-insurance is a norm in most policies.
Okay. So back up a little bit. We kind of got ahead of ourselves. Let's go back to what your experience is in the insurance space. So have you handled mostly commercial, or have you handled mostly residential, or have you just done the same amount of both? Or kind of what does that look like?
When I started, my thought process was residential, homeowners, autos are boring as hell. It's the same old damn thing. It's vanilla risk. And so therefore, my ADD said, this is boring. I can't do this. So I said, I'm just going to go after commercial. Quickly, I changed my mind on that from the standpoint, every business owner owns normally a house and, their personal vehicle. So I said, okay, probably need to write this. So if you look at my agency as a whole, we're probably 60% commercial, 40% personal. It might be as much as 65 commercial, 35 personal lines. So we write personal lines, and I wouldn't change that. But commercial is a lot more interesting to me. So, I tend to prefer it, but every once in a while I have to kick myself to start focusing on personal lines for a while just to diversify the portfolio of the agency and make sure everybody's covered.
Okay. So you kind of did a little bit of both then? Like for so many
Correct.
years you were in the commercial space?
Well, I've never gotten out of the commercial space. I just chose to actually be in the personal space too. Most mom and pop agencies tend to do personal lines, and then if they're going to branch out to commercial, because it's the harder one to learn, because every business is drastically different. A hair salon's not the same as a guy who owns an apartment complex, which is not the same risk as a manufacturing plant, where, a homeowner versus homeowner, yeah, there's some slight differences, but it's still a homeowner. And so the general risk is the same. It might just be located in different areas of town and different values. And so most agencies start with personal lines because it's easier. Me being the oddball I am, I went the harder way around.
Gotta love that. Would you say that when is necessarily a good time to be considering higher amounts of coverage versus lower amounts of coverage? And then when do we need to consider moving from it being residential to commercial? Like say we have a duplex or a fourplex. Should we still consider that as residential?
If you're not living in it, it shouldn't really be considered residential, because really residential, when I hear residential, I hear personal lines versus commercial lines. If you're not living in it, it shouldn't be under a personal lines policy. It should be under a commercial. The other question, as far as when do you need more coverage? So that can create a lot of different questions. If you're talking property side of coverage, well, the higher the value you need, the more coverage you need. But from a liability standpoint, what I always tell people is it really doesn't matter what liability you're looking at, auto liability, general liability. The more assets you control, the bigger your net worth is, the bigger target you have on your back. And so, kind of give you an example, if you don't have much of anything in the way of this world, you don't have to have much liability, because what's the worst that's going to happen? An attorney's going to come after you and he takes the $10 you have in your bank account and that's it. Well, great, there's nothing to lose. But you start gaining wealth, so to speak, even if it's just wealth on paper, So you might say, oh, I don't have big bank accounts, but I own, this property over here and this other one over here, and I have a business. And yeah, in the bank account, they're not super flush. But on paper, if I sold all this stuff, I got a lot to lose. Well, then you better protect yourself with some higher limits of liability, because at the end of the day, if a judgment comes out on you with a lawyer, they'll force you to pay it, which means you might have to start liquidating some of those assets. So the short answer is the more you got, the more you need coverage.
So 100%, no matter what investment we got, it's highly recommended to have liability coverage.
Correct. Whether it's just underlying liability without an umbrella or versus an umbrella, it has to do with the more assets you have, the bigger chance that you need that umbrella. When that perfect time is, everybody's got a different risk adverse nature. And so that's just a discussion you have to have with your agent to make sure when is that time for you to pull the trigger.
So here's an example of a particular thing that might happen to someone buying a multifamily property. And when does the insurance policy become cost effective or uncost effective? So what if someone bought a 50-unit property that was 90% occupied, and then when they took over the property, coronavirus hit, and suddenly 30% of their tenant base just leaves or isn't paying, and now they have a major loss in revenue that drastically affects their numbers. So what insurance, I know coronavirus is just off the wall, but what insurance could potentially protect someone from such a catastrophe?
So in general, if you have a loss of rents or loss of income, or sometimes people call it business interruption, there is coverages out there, and they're named all of those. Some policies are loss of rents. If you're talking residential investment type, business interruption might apply more towards if it's a retail shop or something, because they're not obviously renting it out. But you would get one of those lines of coverage, but the policy language, the way it reads on all those policies, is that it only kicks into effect if the original basically loss of whatever income stream that is due to a result of another covered peril. So, for instance, take Corona out of the situation for a second. We're on the Gulf Coast.
Okay.
Hurricanes. Most policies cover wind down here. And so hurricanes are inadvertently covered. So you got that same apartment complex, hurricane comes through, does some damage to your apartment complex, does damage to a bunch of your neighbors. People can't get out and about. And because of that, you lose a bunch of occupancy because they move away or they go stay with their relatives for months at a time because they lost their job or whatever. In that case, the original peril that caused everything was wind damage, hurricane damage. You already got your property side of it paying to fix the building, but you also, that inadvertently then kicks in the loss of rents if you had that coverage to pay you for the loss of rents during that time, okay? Now there's a time frame where that ends or exhausts the amount of money in there, in which case you got to get back to normal. It just kind of depends on how your policy is designed, and I won't get into the intricacies of that. Switching gears now to Corona, that's a whole different ballgame that we are not normally used to. But it is a lot in the eye of the public right now. So a lot of your listeners would probably be interested to hear this because there's a lot of news coverage right now. Everything from even the president saying, hey, all these people have paid years and years into business interruption, especially the restaurant industry, because they're hurting really bad right now. The insurance carrier should cover it in business interruption, but right now, most of these insurance companies are denying claims. And the reason they're denying claims is for two main real reasons. One goes back to that language in most policies that it has to be a result of a normally covered peril. And the second part of that is normal covered perils, viruses and pandemics are not a normal covered peril in policies. In fact, if anything, they're normally excluded, which hasn't been an issue for decades and decades. No one's having an issue with them being excluded because they go, when is that ever going to affect me? This isn't going to happen. This isn't going to shut down the economy. What do I care that it's excluded?
Yeah.
Now, all of a sudden, they care and they think it shouldn't be in there, of course, because they're hurting left and right. And you've got a lot of people out there saying, hey, the insurance companies should inadvertently pay for it. Even to the point you've got some congressmen and senators trying to pass a bill currently to force all insurance companies to pay business interruption for pandemics and viruses and basically erase that language in insurance companies' policies. The big problem with that is a policy is a contract. Most people don't think of it that way. They think of it as a policy, but essentially it is a contract. You, as in the insurer, or the person who's buying the insurance, agree in a contract to do something, and the insurance company, in turn, agrees to do something in return. So you agree to pay, they agree to cover you on X, Y, and Z outlined in that contract. And if the government comes in and says, oh, we're going to change the contract, we're going to make it how we want it to read, that creates a whole bag of worms. Now, if you set a precedent that the government can come in and change any contract between people, one, it's unconstitutional. Two, if it actually goes through, we've lost all our freedoms in this country because basically the government can come in and control and do whatever the hell they want.
That brings up a great topic. So what if the bill was passed and all insurance companies had to pay this business interruption money? What's going to happen to the insurance just game as a whole? Is insurance even going to be required anymore because most insurance companies are going to be bankrupt?
Well, I wouldn't say most, but a huge chunk of them would probably get hit really hard, whether they go out of business, whether they shrink, whether they figure out how to survive in some form or fashion. Business interruption, I think, would never be offered by an insurance company again. They would just say, okay, well, if you're going to force us to pay it out, we're just not going to offer that line of coverage. That's one way to not pay it out. We're just not going to write that line of coverage. If the government got to the point where, like after 9/11, they forced all insurance companies to offer terrorism insurance, federally mandated, that's a little different. So if after this, the federal government comes in and says, hey, we're going to require every company to offer business interruption, then every company would come out and say, okay, if we're going to force in the future to offer it and to pay for this, we're going to now charge you a premium that we know we can actually make money off of. But the number's probably going to be so crazy high, most companies are probably never going to pull the trigger and pay for it. So they'll just sign a form saying, hey, we know we're not getting it. We were offered it. It was at X amount, and we just decided not to pay for it. So
Okay.
it would change the game a little. But if they forced all those requirements that they had to pay for it and they had to offer it, it would get so crazy priced that no one's going to pay for it. So it's not really going to help out the next time.
Yeah.
It's best if you let the free market be a free market instead of come in and force changes, which is what the government is talking about trying to do right now.
So, coronavirus, how could we have possibly planned for coronavirus? And then what are some changes that you're seeing specifically in the insurance world that's happening because of coronavirus, besides business interruption?
Yeah, I mean, how could we have planned for it? I mean, there's a million things that can happen in this world. I could walk outside and, a meteor could fall from the sky and hit my head and I could die, right? So there's people out there every day warning us of some great catastrophe. And you got a million voices shouting. And so whether it's insurance protection from it or whether it's just proper planning, you can't completely take out risk in this world. Insurance company helps take out a lot of risk, but you can't ever take out 100% of it. So, maybe this is something we'll have a louder voice in the future for our nation, and we'll set up more policies and procedures and plans to be more health conscious and to invest more money in the vaccine world or whatever other ways we feel like we can combat it. But I don't know that we really, unless someone can predict the future, I don't know that we ever could have been more prepared for it, because there's always a million voices shouting at some catastrophe, but there's only so much money out there, whether it's government funded or private funded, to prepare for stuff. And the insurance world only can create policies based off statistical data so that they know they collect enough money. So if there's not enough precedent, they don't have the statistical data to offer something. And so they're not going to just go out there on a limb and just say, oh, we're going to offer you something with no statistical data to figure out how to price it. That's just stupid. They're not stupid companies to be as big as they are and insure as much as they do in the world. So, the second part of the question, how is it going to change the future, kind of goes back to one of two things going to happen, and it's mainly around that business interruption coverage. Either it's going to be federally mandated in the future to offer it, like terrorism insurance, and so you're going to have a price point out there that might actually be inflated more because more people don't really want to invest the time and energy into the right statistical data, so they're going to you just get a little data and throw a high number on it, or you let the free market fix itself, which would be insurance carriers on a case-by-case basis say, okay, we see a need in the market for this now. We're going to really dig in deep, invest the time and money and research, and we're going to offer it on our own, not because anybody's requiring us to, but we're going to get the best data possible, and we're going to hopefully reap the rewards because, one, there's going to be few carriers, and two, we're going to bet on the fact that just like this pandemic was the first one since the last big crazy one, the Spanish influenza, they're going to go, hell, maybe we'll get money off of it for 100 years before we pay, and they'll play the odds. But at least they're doing that on their own accord versus someone forcing their hand, which is going to change the way they look at it.
Now, what are you doing specifically to get out in front of this virus for your own insurance agency?
I just try to be proactive with clients. I've tried to call a bunch of people. You might have got a voicemail from me a while back ago, just trying to let people know we're here for them, any way we can, whether it's shopping your insurance, whether it's, shopping someone who's hurting, maybe we can save them $1 with a different carrier, whether it's helping them find hand sanitizer. I mean, I actually had somebody, take me up on that offer. And I know another business owner who's got a compound pharmacy locally, and they've kind of shifted in this dynamic to stop doing compound pharmaceuticals like creams and stuff, and been making hand sanitizer because there's such a rush on it. And so I bought the guy a few, bottles since he said he was hurting that bad to find some, and send them to his house. I mean, so it's just little things like that, trying to help out where I can. I think in this craziness, we all have to really be good neighbors, to borrow a slogan from one of my competitors, and really help each other out. Insurance or otherwise, just, watch out for each other. And that's what I'm just trying to do as a human being. And I think that just bleeds into the agency. Other than that, just making sure we've got all the right technology to be working from home as effective as possible. So I'm kind of doubling down in technology of different automations in the background to kind of help my staff be that much more efficient in a different manner.
Yeah. So, okay, moving out of insurance, where do you see America after this? What the heck is going to happen? Like, so many people are saying that our freedoms are being taken away, that the government's just doing whatever they want. The Constitution's not being followed. The Declaration of Independence is just useless. What the heck is going to happen when this is all over?
All right, so I will preface this with I am not an attorney. I don't go to law school. This is the opinion of one man, and whether I'm spot on or not, that is up to the legal system to identify. But my feelings and my gut instincts of what I understand of the law and stuff, a lot of what is being done is, yes, against the Constitution. What I mean by that is, okay, so you have governors, mayors, president, all suggesting for people to stay at home and be quarantined. Suggestion is fine. There's nothing illegal with that. Okay. Where the issues come is where law enforcement is pulling people over, fining them, because you have constitutional rights of freedom of speech, freedom to bear arms, freedom of assembly. And that's the big one. If you have the right to freedom to assemble, that means to get out, to be able to go congregate where you want. So if you tell people, hey, you're out and you shouldn't be, we're going to fine you for that. I think if you take that up, maybe not in local court, but if you take it up to the Supreme Court, I don't see that is ever going to do anything but go back to be overturned, and whoever got a fine or in trouble is going to say, yeah, that's all worthless and that's all disappeared. The Constitution protects you. Now, who's going to fight that and spend all the money? It's going to have to be someone either with deep enough pockets or wanting to make a big enough statement. Your general population is just going to say, hey, I'll go along with the suggestion, so I don't even have to go through all that hurt and trouble to prove that I'm right. So as far as that goes, I think we have our freedoms. You just have to push to make sure that they are enforced, because right now suggestions are being turned into how do we enforce suggestions, and that's where the slippery slope of our freedoms is being tested, but the only proof will be in court of how that shakes out, which I'm sure it will. Give it a year or so, someone will drag it up there, and then you'll see it all come back. As far as going back to a normalcy, just last night, the president laid out his 3-part plan, which a bunch of governors and mayors have already kind of been thinking the same kind of train of thought from what it sounds like out there, that, it's going to be an ease and back into the economy. My gut feeling is you give people another 30, 60 days at most, they're going to be so full of staying at home and cooped up and pulling their hairs out and having kids at home, they're going to be ready to get out. And yes, there's a risk. You're never going to mitigate the risk. No government official in power is ever going to say, oh, if I make the call today to open it up, we're not going to have deaths tomorrow. No, there's going to be a death, and and it's a hard decision. I feel bad for them, because someone is going to come back to them and tell them, you should have waited. My uncle died. My brother died. But the simple fact is someone's going to die afterwards. It's not a matter of if it's going to happen. It's going to matter of how many, and where do they feel the line is drawn to get the economy back going so that the people are alive, can make a living and not go into poverty, versus less people die. And there's no magic answer for that. There's a lot of people in power with a lot of statistics out there that I'm sure they're making the best educated decision they can. And we just have to trust that, it's a good one, not only for people's health, but for the economy. Because the economy is an engine that doesn't just start on and off like a switch. If over the next 30, 45 days, it does all start going back to some normalcy, which sounds like it might in at least certain cities across America, you're going to have a lot of things affect the economy. You're going to have all these businesses over time who have missed basically a quarter's worth of profit. And so my guess is they're going to make some price hikes because they're trying to make up for lost profit, especially if they've been paying out all this time and just draining reserves, government stimulus or not. They're trying to figure out wait, we have a obligation, let's say, to our investors. So we got to figure out how to squeak out still the same amount of profit by the end of the year. And so I think in general, prices are going to rise. Some people worry about inflation. I've been keeping up a little with the world economy. You got places like China who are also printing money and doing stimulus packages. So as long as all the other countries of the world, at least the major powers, print money too, I don't think inflation in the dollar is going to happen from a world sense, more from a local sense of just industries trying to make up for profit. But that'll be short term. How long short term is, 6 months, a year, I don't know, maybe a little longer, but eventually then they'll get in a price war and prices will come back down to normal once they've made up for lost profit margins. But it is going to be a little shaky. You're going to see a lot of people masked probably for months, going out and about. It'll be a little different.
Yeah, like how long is it going to be before people are going back to concerts? How long is it going to be before the sports opens back up? Football's canceled, basketball's canceled.
South loves their football. I don't know. You might have some riots if they don't start back.
I know.
So we'll see on all that. I'm not going to make a prediction on those.
Yeah. Well, all right. Hey, let's go ahead and transition over into the last segment of the show called the Core Four. So the first question is, what is your favorite real estate related book?
So, Think and Grow Rich is the first one that always comes to mind, and it's probably more of self-development versus real estate, but you can apply it obviously still to real estate. Have you read it, Josh? Are you familiar with it?
I love that book.
So, at the simplest principle, it's basically there's a million opportunities out there, especially in the country we live in, but you got to take time to put a plan together and work it to make some money. And that holds very true for real estate. You can't just randomly go, oh, there's a property for sale, I'm going to buy it and make money. It just doesn't work that way.
Yeah, love that book. Okay, next question. What do you think your unique skill is that helped you become successful?
Persistence, in one word. When I pull that out beyond one word, it's pleasantly persistent, because there's always going to be a better salesman than you. There's always going to be someone smarter than you. There's always going to be somebody who's got better education than you, no matter who it is that's listening to this. But one thing that anybody can do is develop a plan and then persistently work at it. If you don't give up, you never fail. And so it's just sticking the course, being persistent.
Awesome. Okay, next question. Tell me something that's true about real estate that almost nobody agrees with you on.
Hard to find something that nobody agrees with you on, so I'm going to alter that to the mass majority don't agree with you on.
Yeah.
And granted, the mass majority aren't maybe necessarily invested in real estate, so plenty of investors will agree with this right away, which is, there's no bad time to buy a property. It's just bad individual properties or bad vision. And so what I mean by that is you can have a market where, let's say, interest rates are crazy high and they say that the real estate market's bottomed out. So 07, 08, 09, 010, the market was crazy, right? It had bottomed out, right? I bought my first house in 010 for 0% down. People go, how'd you do that? The market was horrible. And I'm going, well, yeah, but that's one way to look at it. The other way to look at it is there's a lot of deals. So I bought a short sale. And then, people said, yeah, but it was so bad. People were requiring these 20% down. How'd you do a zero? I looked at what was available. USDA. I had to go out of the country. I had to go to the more rural part of town, but I could buy something 0% down. So I used what was available to me to buy a good deal with nothing out of pocket in what typically is a bad time, Now, the vision side, has to do with property's only worth what someone's willing to pay for it, a lot of people see. And everybody's got a different vision. Someone might buy a piece of property and turn it into this house into a rental. Another person, a developer, might turn it into an office space or a grocery store. But the highest and best use might be, if it's on a corner, turn it, let's say, into a pharmacy. So that guy's vision is different than the other guy's. So, depending on what vision you have, you can make something out of nothing. So a lot of it's just how you view the world and how you take the time to put it all together.
Yeah, all the different opportunities there are in real estate. It's just, you could buy a house and flip it, or you could hold it and have it as a rental, or you could BRRRR it, or you could, like you said, short sell it, or sell it owner finance, or lease option. It's like, yeah, I've got this deal. Is it any good? I don't know. It depends on how I structure it, how I handle it.
Exactly.
Okay, so last question. What one piece of advice would you give to our listeners wanting to succeed in real estate investing?
This always is a repeat of what I said before, but make a plan and then just work it day by day. If you have no plan, you're most likely not going to stumble upon success. So put something down. It doesn't have to be the perfect plan. Start somewhere. Might it adjust? Yeah, it probably is. You probably need to review it every so often, whether that's every month, whether it's every 6 months, whether it's every year. And you're probably going to adjust that plan and restructure it. But have a plan and then just work it. Do a little day by day, or at least week by week, consistently work on it. Because the first biggest issue is most people don't have a plan. And then the second biggest one is that when they do have it, is that they don't work on it. So just doing those two things will make all the world of difference. Maybe not today, but if you do it and fast forward and look back 5 years from now, you'll go, man, there's a world of difference where I'm at.
Yeah, just like that saying, you don't plan to fail, you fail to plan.
Yeah, or how you eat an elephant, one bite at a time.
What? Yeah. Hey, this has been awesome, man. Hey, well, I've got one last question for you. If anybody wants to learn more about you and your business, how can people get in touch with you?
I would say just reach out to my agency, the Roux Company, ROUX, just like you make a roux if you're making a gumbo. If you search the Roux Company online, you're pretty much going to find us. I got a unique last name. My phone number, 251-649-9335 is the office number. And just ask for RC, and I'm more than happy to help people in any way I can, whether it's sharing advice or helping them with insurance or, just having another friend out there, whatever, I'm here to help.
This has been awesome, man. You have a wealth of knowledge, even farther past insurance. So I feel like I've learned a lot from this.
Well, I've made a lot of mistakes, lost a lot of money, lost a lot of hours. So I hope I learned something along the way to share with people.
All right, man. Hey, I appreciate you coming out on the show, and we'll see you later.
All right, thanks.
What a show. The tenacity on this man is through the roof. So, hey, if you want to go learn more about insurance and figure out how you too can make a good choice on your insurance decision when it comes to any investment or just your own personal house or car, then give him a shout. Go check him out. He's got a website and an email address, and he answers when I call him. So you guys should be good there. So today, when this episode comes out, hopefully this has been able to give some type of clarity as to what is going on in the insurance space in regards to everything going on with the economy and everything going on with the government. Hopefully you guys were able to get a wealth of knowledge from this. I know I was. I will definitely be listening to this podcast again. This guy, just the fact of all the different realms of business he's been in, he's just a real business-minded kind of guy. So, hey, go check this podcast out on Apple iTunes. Go subscribe, or our website at ferraricapital.com. And I can't wait to do this again next week with you guys. We'll see you later.